The tides are shifting. Are you riding them or missing the signs? Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Today's session uncovers volatility flashing an early warning. Are you paying attention? Yields rallying. Did the spread candles call it first? Dollar still undecided at the bottom, but what does it mean for gold and silver? Natural gas stays the course, no surprises here. Oil prints green despite that a 2% loss, but the real story, it's Exxon and Chevron. S&P 500 under multi-angle review, trends, patterns, setups. Nasdaq live Elliott Wave breakdown. Special features today. Apple and Buffett's Berkshire. Tricky moves, live wave setups you won't want to miss. Let's get into the charts. No fluff, just technicals. And as usual, we start with the Volatility Index. This is the daily closure today. So what I can say that on the index itself formed an inside candle and it can turn bullish tomorrow, but we'll see whether it has a very strong follow-up. Speaking about the daily frame on the futures, it formed a fairly strong bullish harami entirely inside the body of the red candle with very good chances to see higher prices tomorrow. If we look at the weekly, just a reminder that the weekly was not able to form a top, for both index and for futures. So the chances are still with bulls here. And this one, this is an Elliott Wave chart. I made slight adjustment to the targets based on the potential for forming a bottom here. So this is the chart that we've been tracking since April 15th after this strong move down in a corrective fashion, and now it's the chance that this wave completes as an ending diagonal. So the chances for volatility are slightly better for bulls for tomorrow. Now let's have a look at the bond market, and we start with the candles for 2, 5, 10, 20, and 30-year yields. So what we are seeing is that 30, 20, and 10, they're slowly progressing upward, bullish, no questions asked. The big question is about the 2-year and 5-year. What happened today, I don't know. I don't follow the news, but I can see a big candle that can be bullish, can be bearish. We'll see how it, what it does tomorrow. But if we look at this one, so we need to look at the spread, the next one. So the spread is very concerning here, and particularly this move, sharp move down, which if we look at the Elliott Wave chart, so this wave that I circled here is now entirely corrective. So, and now this move today, just to emphasize that, if it moves now below zero, makes it negative, I wouldn't be surprised at all. So now we have two corrective waves. One is here and another one is here. Most likely this wave is a diagonal, but we still yet to confirm it. Now let's have a look at the other charts. So this is the 10-year yield. What we are seeing, this daily we already discussed. It's a healthy bullish continuation candle. On the 5-day frame, it's a closure with a strong bullish harami with a very good chances to move higher. And on the weekly frame, after the piercing line made on Friday, there is a good chance for confirmation this week. Still 4 days to go. Speaking about the Elliott Wave chart, this is 20-year yield and reverse counterpart of TLT. The wave is moving upward. So far, it looks like it is impulsive, but I would need to see a bigger wave before making such conclusion. And today is May pips. Moving on, this is TLT. So TLT formed a candle which many might think it's an inverted hammer, and it might stop the fall here and bounce back. So we might see a bounce, but the direction is clearly bearish. I think that first of all, we have a freshly made 8 by 20 made bearish cross, and then on a 3-day frame, which also closed today, we have a very strong inside down bearish candle. In addition to a bearish harami that was formed on Friday on the weekly frame. So far, the weekly has a very good chance to confirm it. And now let's have a look at the Elliott Wave. This is how we left it on Friday after our analysis that we shared in our weekly review. So far, the wave is falling down. Most possible it's wave 3 of a bigger wave 3. So far, it's really difficult to make a projection here, but I think in a couple of days we should be able to. At this point, I am looking below for a move below 84.85. So that's about bond market. The biggest concern is the spread. So now we have a real concern about it turning negative. Now let's take a look at the dollar index, see what the greenback is telling us. So the candles today, it had a very good chance to break through this neckline, potential head and shoulders or double bottom. But it was put up, and it looks like it is closing above the 8 days EMA, which would be a bullish closure here. Minimally completed bottom on the weekly frame, so 4 days to go to see how it closes. On the monthly frame, it's undecided, obviously. Now let's look at this one. Just a reminder, no changes here. Still potential for one more lower low. However, let's see how this week closes. So far, dollar is undecided. That's about our strategy consideration. Now let's move on to the commodities sections, and we start with gold. So what gold did today is a very strong tower bottom, and now we are looking for another rally, perhaps hitting a higher high, a new all-time high. Let's see how it develops, whether it has a lot of energy to move there. So far, this is bullish, and on the next couple of days are expected to be bullish. The weekly closure was not entirely bearish, so gold failed to form a tower top, and in our review I discussed that there is a potential for a new all-time high, but it's not confirmed yet. So let's see how gold develops. The interesting part is here. If we look at this wave, so I did some analysis, additional analysis, and I think that there is a possibility that the entire wave down was just wave 1. From the perspective, so this was wave 3, and this was wave 4. And why? Because this structure here is very much resembling a triangle. And in this case, so this is potentially a triangle, A, B, C, D, E. So this one I'm talking about. So if this is confirmed, and so far the wave upward is somewhat, it's more corrective than impulsive. Let's see how it develops. So this could be just a flag for wave 2. And if it happens, however, this could be also wave, an impulsive wave. 1, 2, 3, 4, and 5. So I'm also looking for this potential going into an all-time high. So the last wave of a bigger correction. So these two possibilities remain on the table. Let's see how gold develops in the next couple of days. So there are chances, and this way, just to be consistent, I would like to make it of a blue color. So now we have a clear blue path, potentially the last wave of an impulse upward, or the red path with a triangle inside. So far, if I looked at Elliott waves and Fibonacci levels, this triangle fits nicely into the overall structure of the potential wave 1 in red. So let's see whether it's going to be wave 2 or maybe even a bigger wave 2. Might take some time. And after that, we will be looking for wave 3. But the targets we will discuss later once we know all the turns. Now let's talk about silver. Silver is closing today with also a bullish engulfing candle, and there is a chance that it will be moving slightly higher. However, I would like to mention that silver closed the week with a bearish engulfing, strong bearish engulfing here. Even if it moves higher to this week, it still needs to close above approximately this level in order to negate this bearish engulfing. That would be quite a tall order, but we'll see how it forms, what it forms tomorrow. So far, this bearish candle, even though this is a bullish engulfing, it's not fully negated, and we need to see a strong follow-up tomorrow. And I think that this freshly made 8 by 20 EMA bearish cross wouldn't help bulls to advance tomorrow, but we'll see. And the 5-day frame today also closure. This is reinforcing the midterm odds, a very strong bearish engulfing. So now we have middle term odds bearish, short term odds bullish. Let's see who wins. Weekly and 5-day are bearish. Now let's have a look at the Elliott Wave chart. So no changes here, nothing decided. So there is still a possibility of a purple path here. I can see that there is a chance for developing an impulsive wave, especially if we have a very strong wave downward in the next couple of days. This would be wave 303. However, there is also a chance for wave B, C of bigger B, and wave, the green path is also on the table for now. So that's, I think the next couple of days, particularly this week, would be very critical for silver to make a decision. I'd like to remind that midterms are bearish and the short terms are bullish. And this is an SLV closure today, bearish candle on the daily frame, 3D frame, 3-day frame. This is an in-neck candle, and with very weak bullish signals. So most likely just a continuation, bearish continuation. And as a reminder, the weekly closed with a strong bearish engulfing, capping up this advanced block formation. Now let's move on to natural gas, to our energy section. So natural gas today, it's an incomplete dark cloud cover, most likely a bullish continuation candle. 5-day frame completed with a strong bullish candle, and it formed a bottom technically, closing above this line. The weekly, after a very strong weekly candle, obviously not decided today. We need to wait for another 4 days. The chart also remains the same. Now I think we can place a channel here and expect wave 3 to be somewhere above 436, maybe even 460, somewhere in this area, 460, even 470. That's the perspective for wave 3, between these two. Well, if natural gas continues on, then this would be a very strong move and very strong message for a continued move higher. And if we look at the slightly bigger frame, this is what we discussed. It's not changed. I'm still expecting this wave to form either an impulse in red, 1, 2, 3, 4, 5, or a corrective wave in green. Let's see what it does. So far, the odds are bullish. Now let's talk about oil. So what the commodity candles are telling us today. First of all, this is most likely a neutral candle. It could be bullish. However, the technical support is rather weak, and we need to see a very strong bearish reversal confirmation in order to make a turn here. So after closing a week with a very strong bearish candle, obviously this is falling down, and we don't have a momentum reading between daily and weekly candles, so the 12-hour frame so far undecisive. It's rather neutral. Now let's have a look at the chart. The chart remained the same, no changes since May 3rd, as we discussed it. This could be wave 3, and oil could be forming a bigger wave 4. Still, wave 3 might not be completed, and I would expect another move down, although it still needs to be confirmed. Well, that's the perspective, and if we look, yes, this is one I wanted to tell you also. This is Brent. It had a similar candle, a green candle, but it's rather in neck one, and most likely it's going to be a continuation one. Let's see the candle tomorrow. On the weekly frame, we have two falling 3 methods in a row, just one and another one on the weekly. With weekly candles, very good chance to see lower prices. And for the final discussion on oil, let's have a look at Exxon, Chevron, and the Conoco Phillips. This is their closure on the daily frame. Candles are bearish continuation on all 3 of them. If we look at the bigger frames, let's say 2-day frame, it's even stronger bearish candle. 3-day frame also bearish. 5-day frame, it's closing tomorrow. All right, so on the daily, 2-day, and 3-day frames, we have strong bearish candles. And I would like to mention about this blue line that crossed purple and the red ones in just a matter of 1 week. So these are 2 strong 50 over 100 and 50 over 200 days moving average death crosses, and it looks like the bigger one, 100 over 200, is just a matter of a few days, maximum next week. All right, so that's the perspective for oil, and that wraps our commodity discussion today. Now let's move on to S&P 500 and see what we can spot there. So the candles today are somewhat neutral for SPY, Triple Q, GIA, and IWM. IWM is a bit more conclusive, so it's potentially a bearish harami on the green candles. Well, that's we need to see a strong confirmation for either path. So these are not conclusive. But if we look at the futures, that's a different and interesting story. First of all, I'd like to show you this. So this is the chart that I shared yesterday with our subscribers, saying that all four indices formed very strong tower tops on the 4-hour frames. It happened yesterday night, and now we have a statistics in play, right? So if we look at what happened now, so we see this tower top, 3-candle consolidation, a failure of move up, and a decline here. So the same for Nasdaq. Dow Jones was an outlier. So now we have three candles confirmed, and 3 indices confirmed, and one tried to negate it. However, it looks like it's going to be declined. And the biggest concern is the Nasdaq, which formed just now the final 4-hour frame of the 4-hour candle of today, and this is strong bearish engulfing. Now we are looking for lower prices for the opening and potentially for tomorrow. And if you look at the daily frames, so this is bearish harami on Nasdaq, Dow Jones also bearish harami, and a similar candle for Russell futures. So now we have bearish candles here, but they are not confirmed. We need to see a confirmation, preferably tomorrow. And for harami confirmation, we might see a higher high. Now let's have a look at the Elliott waves. So this is the chart that I shared a while ago, April 22nd. Was the last edition, and now we see that futures ideally moved into the target area. So far the top is not formed here, and we might see a new higher high here. Let's see if it happens tomorrow. So far the red path is A, B, C, wave B potentially complete, and we will be looking for wave C here in red. Although there is also a chance to see a bigger correction, bigger corrective action in purple, wave A, B, C of a bigger wave B, and then wave C would launch somewhere in June, July timeframe. Well, that's a bigger picture. If you look at this smaller one, it's still unconclusive. Ideally I would be looking for one more higher high. However, this is the index itself, and it has quite a few gaps that didn't allow for a very precise identification and estimation. So far the futures were much more convenient and much more informational. Now let's do some assessment of the sectors. So similarly to the index itself, financial, technology, industrial formed a green candles, but they were not able to close at a new higher high. So this potentially could be a bullish or bearish, depending on the candle tomorrow. So far, the healthcare is bearish, and consumer discretionary is in the same boat with technology and financial. Energy is bearish, utility is neutral, and the consumer staples are also neutral, looking for a confirmation. If we look at the large caps, so there are quite a few strong messages here. First of all, Microsoft. This is a second failure to make to close at a higher high. above the red candle high, and this could be a very strong reversal message. Let's see how it closes tomorrow. And I'm not even talking that it is trading above the Bollinger Bands right now. And this is the 2-day frame closure, also a failure to close above the high. So Microsoft is on alert. Amazon, expectedly, after a bearish harami on Friday, it failed, and it fall down, and right now it is below, no, it's still above the 8 days EMA, but it's right on like 4 basis point. Apple is bearish, and it was expected. Now we have a looming 8 by 20 EMA bearish cross. Tesla is also bearish. If you watched our video a few days ago about Tesla not done falling, I am highly recommended you to watch it again. Meta in the same boat as Microsoft. Nvidia is somewhat neutral and or leaning bearish, I would say, and Google so far is bullish. The tricky thing happened with Berkshire, and I think that I looked at it, and today I will discuss it in about 5 minutes in our special. Now let's have a look at Nasdaq. So Nasdaq's wave that we discussed way back in April 22nd. So far, it is executing nicely. I think that this is going to be an ending diagonal, and it might be already completed. So if this is so, then we will be looking for a quick return towards this level approximately. So this was 17,654. So this is the exact level, the beginning of an ending diagonal. So let's say 17.7K approximately. And if we look at the short-term wave, something that we discussed earlier today, and I shared this on Twitter and on Discord, saying that Nasdaq is probably done with an impulse down and a corrective wave A, B, C here, and the C being a diagonal for wave 2. So far, the execution is perfect. So almost hit the target, and I think a little lower here would complete the very first wave of wave 3. And in our case, it would be quite a move. So if this is wave 3, then we would be looking for the next target. So let me measure it. So this is the entire wave 3 and the entire wave 1. So wave 3, we would be looking for somewhere here or maybe even lower, because for Nasdaq wave 3 tend to be longer, sometimes two times the length of wave 1. So this would be the wave 3 target. Well, let's see how it develops over the next day or two. And this would be wave, potentially this would be wave 1, 2, 3, 4, something like this. So this is very preliminary targeting at this point. I'd like to see the complete wave 1, and after that we would be looking for wave 2, 3, and 4, and 5. So that's the perspective. Well, that's all about Nasdaq, I'd like to say. And now let's move on to our specials of today, and we'll start with Berkshire Hathaway. So this is the chart that we discussed on April 16, and it was here. So Berkshire moved down However, it was able to reverse. But not everything is bullish now. I would say quite the contrary. So now what I'm seeing that Berkshire completed an ending diagonal. Oh, sorry, wrong one. So I need to start from here. So this was the first wave, wave 1, 2, wave 3, 4, and this was tiny move over into the new high was the end of this diagonal. Now we can remove certain elements from here. So this was indeed a corrective move upward, and what I'm looking for right now, so let me put here, so we have a classical, so this wave 3 is higher than this wave 1 by just a few basis points. I measured it already, and this is the completion of an ending diagonal. Most likely this is an impulsive wave, and this is already wave 1. So in our case, we are looking for a return toward this origin at the minimum. And the target is 462. So this is 462 would be here. All right, so this is the first target. Now, if we look, we can remove this for now, but it wouldn't change it a lot. So now we are looking for potential wave 1 here. This is wave 1, possibly complete. Now this would be wave 2, wave 3 down here, wave 4, and wave 5. So that's very approximate at this moment, and I'd like to make some measurement with Fibonacci. So possibly it would be here for wave 2. Then we would be looking for wave 4, 5. I think it would be lower than that, maybe into 4. So far, this would be the most typical path. However, we need to see how wave 2 develops and what would be the start for wave 3. This is the diagonal. Now, if we look at the bigger picture for Berkshire, and let me bring another chart here, and I'd like to see the weekly, it's too large, so this one, for example, 2-day chart. So the interesting thing here happened. So with this higher high that Berkshire made a couple of days ago, it technically made a big change in Elliott Wave formation. Now I'm looking for this particular wave, 1, 2, 3, 4, and 5, as an ending diagonal because of this big overlap. And obviously it's going to be expanding ending diagonal, and now it explains many things that I didn't have an answer before. Why the wave 1 was corrective and why wave 3 was not entirely impulsive either. So now it explains things. So we have wave 1, wave 3 as a corrective wave, too many overlaps here, and wave 5 also as a corrective wave, potentially as a diagonal itself. So if this is the case, and if this hypothesis is accurate, then I would be looking for a return toward this level at least. And this is much more serious than the previous chart. And this would be low 437.90. 437.90. This is the perspective, and I'd like to make it okay. So this would be my projection here, and just to add the watermark. All right, so this would be the perspective for Berkshire. Well, it's quite a move, and it would represent a drop of about 19% of the most recent top. Quite a move. So let's remember this, and this is going to be the first wave, most likely, and after that we will be looking for a much bigger perspective. So that's all about Buffett's company. Now let's talk about Apple. We haven't discussed Apple since April 17th, and now I think it's time to get an update. First of all, this wave upward has been corrective, well, just from the look of it, and now from the candles perspective it is falling, and we have a confirmation today of a reversal. Now we have a looming 100 over 200 bearish, daily bearish cross. Most likely in a couple of days we'll see it happen. And the weekly frame, it was bearish closure on Friday. Now we are seeing a follow up. And if we start looking at the monthly closures, it's just plain brutal. The monthly candle was most likely a bearish continuation, but if we look at the 2 months frame, it is either a tower top or a confirmation on the bearish Harami reversal. And the closure of the 4 months frame is just an inside down, a plain inside down, very clear, very similar to what bearish engulfing does. Now let's have a look at the statisticals and technicals. So this is the monthly MACD bearish cross that we were talking about since March and April. It happened in April, and now it expanded in May. So, but the biggest concern right now is this one. We discussed it on April 17. This is statistical perspective for Apple. So this was a 2 months bearish cross. If it happens in this 2 months period, well, then we would be looking for this particular range. Average 48% drop, which is 133, range 18 to 82. 18 is we already surpassed, and Apple has been about minus 35% of the top. However, it bounced, but it's the bounce is not impulsive. It was a corrective, so we are looking for a continued move down. So I'd like to say that average, statistical average would be 133, and the lowest, the low range reading is 46. This would be something similar what Apple did in year 2000. Some might say that year 2000 was different, and it was a different Apple then, but I'd like to say that technicals are the same, so they don't really care. Let's see what Apple does this time. So I'm looking for 133 as a potential target at this moment. So now let's have a look at the chart. So this is Elliott Wave that we discussed way back in March, saying that Apple has a good chance to form wave 3 here, then obviously it will be wave 4, and so on and so forth. So it hit the bottom target here, clearly making an impulse here in January, then the corrective wave 2 or B, and now we have another impulse down, and this is potentially wave 3 of a much bigger impulse. So now we can have wave 4, and if Apple moves towards and makes a new lower low here, this would be considered wave 5 of a much bigger correction, which the entire wave started in December, and ending in May would be just wave A of the very first wave of the correction. And now we can have a look at the bigger picture. So this is the bigger picture. This is our discussion early in March, saying that Apple is expected to drop towards 164.08 because of the ending diagonal. And this is exactly what Apple did. So almost to 164. Now we are looking for a continued move down, especially considering the technicals and candles closures of the large frames. Yeah, that's the perspective for Apple. Just a reminder, this is the chart. This is what we are looking for. If Apple makes a new lower low, and it looks like this wave has been impulsive so far, if it is indeed the case, then we would be looking for something more concerning. Well, that technically wraps up my discussion today, and before you go, I'd like to wrap it up. What we covered today wasn't noise, it was signal. Volatility brewing, yields shifting, gold hesitating, oil confusing, and tech giants lining up for something big. When the public sees this 3 days from now, will they wish they saw it today? You didn't wait. You were here. If this episode gave you an edge, help us keep going. Like the video, share your thoughts or requests in the comments. Share this with your trading groups on X, Reddit, Discord, or wherever you talk markets. Thanks to the 23,000 subscribers who already made the choice to stay ahead. Not yet a member? Join now and catch the waves on time, not after the move. At Investing Angles, we don't follow. We forecast before the herd even blinks.